Well, good afternoon. Hopefully, everyone is doing well. It's your resident online mortgage lender, Robert Lewis, NMLS license number 180100. Let's see here. Looks like we got it right this time. We want to go there. Yeah. So we're live. We should be live on Facebook as well. Want to thank you guys for letting me bend your ear on this Friday. Hopefully, everyone has had a great week thus far. And per the invite or the topic, we're going over this week's topics that I think will be beneficial to you all if you are in the mindset to either purchase residential real estate, one, two, three, 4 units, and or reposition yourself, refinance. So that's why we're here. Before we get started, just a friendly reminder, this is an interactive uh, process. So feel free to leave comments, statements, or disagree. The only rule is you do so respectfully. Uh, yeah. If you have a question, put a Q with a preceding colon, C, colon, or a statement. Question, Q, comment, C, S for statement. And if I can't get to it during the live stream, especially for my Facebook folks, I will make sure to follow up afterwards. So today's agenda, we're going to be talking about what you really should be focusing on if you really want to try to time interest rates. Something I don't advise you to do, but if you want to have a better understanding on how interest rates work, we're going to talk about the 10 to 2 year uh, outlook as far as treasuries are concerned, and give you a little history as to how that is a better indicator of where mortgage rates may be going, opposed to the Fed funds rate. Okay. I'm going to talk about why 50% of you all out there that are looking to buy a home don't shop, and how that's detrimental to you, and maybe provide some solutions on how you can move forward. Credit scoring while shopping. Want to kill some of the fables that are out here and the urban legends that might be preventing you from doing so. Then we're going to segue into a process, if you will, again, of the application documents that you need to be able to move forward. And then lastly, we're going to wrap up. So without further ado, let me check one thing and then we're going to get all into it. Yeah, we're good over there. So let's start off with looking at the 10-year to 2 year Treasury note as they track. And the reason you want to do so is because this is a better indicator of where mortgage rates are going. I know you're hearing online from all the experts and the gurus that you should be focusing on the Fed funds rate. And although the Fed funds rate will have an effect on mortgage rates, the real thing that you need to track is the bond market. If you really want to get into the weeds, you want to look at some of these offerings that are being auctions, not offerings, that are being done when we're selling certain tranches of treasury notes. And that'll give you a better idea as to the broader market and the appetite for bond loans. Because at the end of the day, here's the education for folks like me that were in the back of the room, right? Uh, Inflation is a nemesis to long-term dollars or income, future income. Okay. And so, why would someone invest in a bond that's going to mature in 30 years if inflation, Pac Man for those of my generation, bang, 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 if inflation is going to eat up your buying power, when you can come to the shorter end of the yield curve? Okay. Specifically, as we look here, let me kind of track here with you. When we look at 1 month, 3 month, 6 month, 1 year, 2 year, 3, 4, 5 year, 10, 15, 20, 30 year maturity dates, why would we invest out here when inflation can eat up our buying power, when the yield, the amount of monies that we get back, is higher on the shorter end? And so the relationship between the 10 and the 2 year is a great indicator of where interest rates are going. So, so much so that um, the Fed fund rate has not even been lowered yet. Okay, still 5.25, I believe. And the bond market has already priced in lower interest rates. And that's more of a function of the employment picture. Okay, it's real simple. The less people that are out buying helps keep inflation down. All inflation is the same good costs more. So when you have more people that have the ability to buy good and there's a limited supply of good, then guess what happens to good? Price goes up. Real simple. So you're better suited watching the 10 to 2 year relationship, and we still have an inverted yield curve. Let me go here. This gives you a better picture. Uh, and if you guys want these sources, or you could just type this into your browser of choice. And one of the places that I do track is Market Watch. That's a good source because it gives you that information on a daily basis. But whenever you're looking at the yield curve, 1 year, 1 month, 2, 10, 30, see the 2 to 30, they're still almost 0.9% inverted at this point. So, what are you looking for those that want to get excited? When the shorter end of the yield curve, when it matches, right? When the when the when the when the yield, when the profit is lower here and then gets higher as we go further out, that's when you'll really start seeing a change in mortgage rates. Last thing I want to say on this, and we'll keep it moving, is that you have to watch the government and see what they're doing as it pertains to buying mortgage-backed securities. That's one of the biggest things that happened during the pandemic, is that the guarantee and then the reinvestment of the payoffs that people would have back into mortgage-backed securities to help those folks that were at the longer end of the yield curve. Well, they have been buying less and less and not reinvesting those monies back for a while now. So, said all that to say, rates are going to be coming down. If you're someone that's in the 7% range, right, and you can get a full point, by all means do so. Trying to catch a falling knife, especially if you're buying a home. If you're buying a home and you lock in with a lender that you know, like, and trust, and the difference might be an eighth of a percent somewhere else, I wouldn't play that Russian roulette, right? So you really have to be locked in and understand your numbers. And yeah, that's what I'll say about that. So if you guys want some more information, we'll go into that. It's not real sexy. All I'm saying is don't get too caught up in the Fed funds rate because it's not a direct correlation as it would be to credit cards. And let me say this with credit cards, not to deviate too much, but just because the Fed fund rate goes down, the credit card companies aren't going to automatically lower your rate. Same thing with HELOCs. If you already have a HELOC in place, you have to look at the terms of your HELOC and see what your ceiling and your floor terms would look like. Okay. So you have to understand what it is that you've gotten, or you need to reach back out to that lender and have them explain to you. Because I don't want you thinking, hey, when rates come down, your terms that you already have, it may not affect it. Okay. Now, if you're getting into a deal, then yeah, it'll be different. But if you already have one established, you need to understand what the terms of your loan is, if that makes sense. Let's move forward. Now, according to the CFPB, right, from back in 2015, it says their report finds that nearly half of borrowers do not shop for a mortgage. Okay, and that's 2015. You say, well, Robert, that's old information. Well, according to Lending Tree, a lot of you guys like running the Lending Tree, right? 54%, that's still half, right? A little more than half of buyers don't shop around for a mortgage, even though 45% of those that do receive better offers. So the question that I have for you guys is, why is that? Like KRS-One, right? Why is that? Well, just over the last 3 months, I've been kind of tracking that in our practice. And respectfully, it just boils down to laziness. And if it's other than that, you guys correct me, but blows my mind that the majority of folks that I look like are minorities. And, you know, it kills me, man. You want the best deal, but you're hoodwinked and bamboozled into thinking you got to go to one lender, right? Or it's got to be a local lender, right? Or you got to be able to see them. Do you know how many people have been scammed, hoodwinked, and bamboozled by people that have big, pretty offices that you could go in and see and shake their hand and they still steal your money? So it's not to say you shouldn't be diligent and vigilant, but to that point, those that get got more than often are just so trustworthy and you don't know your information. So what we want to do is provide you, encourage you to be someone that champions for yourself. That's the whole reason we have all these rules and laws. But if you're waiting on someone to do it for you, you'll be sadly mistaken. I would say this. I would say this. I very rarely see a loan estimate from someone that gets a second opinion. And more times than not, they're not folks that are from our community. Okay. Um, but very rarely do I see situations where I cannot better that rate. Then it boils down to preference, right? I get it. If you from the old guard and you want to go down to your local bank thinking that they love you, that's your business, right? Just get in the jam and see how much they love you. But that's your business, okay? You do what you do. But we're in the 21st century, and not only do we have all these laws for you to shop, but now we have the connectivity where you can reach other people that might not be in your local area that have had a monopoly, and you just believe everything that they say, right? Because you can see them. Uh, then I just would strongly encourage you to get out of that practice. Now, that's up here. The other thing to it is I've gone to one place and I've taken one application and that's it. Okay. And so I'm going to the CFPB for a reason. Okay. Because this is the bureau. Equifax, TransUnion, and Experian aren't bureaus. They're private companies. They're agencies that collect our data. The CFPB is the advocacy agency for all of us as consumers, right? And so they track these types of things. And just like Lending Tree is saying, 45% of people that just get a second opinion, okay, find that they get a better rate. I see it all the time. Okay, so here are some clues. This is some clues on how you should know if you should shop or not. If people have a lot of overhead, okay, if you see them online advertising everywhere, okay, they got to recoup and they're going to recoup those funds. And guess who's going to pay for it? You are, right? Now, what you don't know is you might look at somebody like myself and say, well, I don't trust them. I get it because you don't know me from Adam. But what I do, and this is the education for you guys, now you can go online. You can look at actual reviews. We actually do video reviews because you can't really fake those from real people. All right. Along with other reviews. Okay. You look at the videos that we put out over a period of time. Is the messaging still the same? Do you perceive that that person has what Google now has with the EEAT to get rid of the AI people and all these folks telling you about loans that don't even have a license, even those that are hiding under a federal charter? They're not licensed. They don't know what they're doing. But I digress. But do you actually have the experience? Because see, when I'm communicating with you, you can tell who's faking it until they making it, or who is playing on your emotions, your fear, right? Local is better. Is it? How do you know? Right? So these are some of the things. A lot of overhead, a lot of advertising. Those monies have to come back somewhere. Okay. Now the other thing that a lot of us want to hide behind is the following: your credit scores while shopping. Well, I'm back at the CFPB again, right? And this is facts. This is facts. What happens when a mortgage lender checks your credit, right? Credit checks coming from mortgage lenders are reported to the credit reporting agencies as an inquiry. So you have a hard inquiry, and now today we even have soft inquiries, okay? where it doesn't even show up. But an inquiry typically has a small negative effect on your credit score. Inquiries can be seen by other lenders when they check your credit. It's down at the bottom. I might get a credit report one time and, you know, uh, what's the word I'm looking for? You guys know, black out, redact all of the pertinent information. But we can see on the credit report, right, when you go somewhere else. Hey, have you been shopping with any other lenders? I ask that question all the time. And the reason being is I don't want to waste your time. Because if I know if you have a great deal, I'm going to tell you to go over there, right? Why should I incur a cost when I know you're going to? No, I hadn't shopped with anybody. Pull the credit report, and y'all been in 15 different places, Rocket Mortgage and all these places, and you guys don't even know we sell loans to them too, right? At a discount because we don't have all the advertising that I just mentioned. But I digress. I digress. Um, it says that let's see here. Inquiries can be seen by other lenders when they check your credit, right? So what's that's right here? Does shopping around for a mortgage hurt your credit? Right? That's the question. No, it doesn't. What hurts your credit is the revolving lines of credit that you have. Your utilization is out of whack. And a lot of times when you do that one inquiry, because credit is reported on a 30 to 45 day cycle, you may have had your credit cards report, or you may have had a collection that pops up, or something that has been laying in the blood, right? Because these attorneys and collection agencies know whenever you want to buy a home, all right, we got them. Let's pop it up. These are the reasons for a lot of you guys, your credit scores drop, okay? Or that credit repair that you paid all those thousands of dollars for, that they said that these certain things wouldn't pop up after a period of time. They pop back up again, right? And you're out of that money. You see what I'm saying? Respectfully, this is what happens a lot. But it says no, within a 45-day window. Set out that I'll let to say this. If you apply for a home loan today and you go to 5 different lenders within the next week and submit an application, which in my opinion is too much, right? Minimum of 2, no more than 3. Why? Because we're all selling loans to the same 4 or 5 investors. The difference is in the loan estimate and the cost based upon the profit that we're trying to make. And it's all right for a company to make a profit. And the overhead, the cost and the overhead, the section A and B fees, if you will, on a loan estimate. That's the only thing the lender has control with. Nobody talks about the realtor commission. Well, they about to start getting into that here after the 17th. But nobody talks about the title company. Title company been stealing for years. They need to get on that for real, for real. Yeah, I went on a tangent. My bad. This is live. This is live. Respectfully. But section A and B are the sections where a lender can really have an effect on those costs, right? Again, along with their pricing. So back to the credit report and why a lot of folks don't want to shop. Again, I told you why in a lot of cases your scores might go up or down, but it's not because of the mortgage inquiry, because it's looked at as one inquiry. So when I see that credit report from that customer that I just told you about, and when I asked if they've shopped, they say, oh no, I haven't been anywhere. And they've been to 15 different lenders. It's looked at as one inquiry. Okay. Now, if you think you've been a victim of bad practices and you've had more than one inquiry within a 45-day period, and you think that's the reason that it has negatively affect your score, you just go right back to the CFPB, right? And there's ways for you to dispute that information with them. And I guarantee that if you're accurate, they will correct your scores. But that hasn't been my experience. You know what? Let me hold on here for a second. Let's see if we have any questions over on the book. Again, guys, it's no, I think we're good. I think we're good. They changed some things around, so you know what I mean? Can't do it like we used to. Can't do it like we used to. So let's see here. Do do do. Yeah. So credit and shopping. So with that, here in this next segment, we want to talk about application process. It blows my mind that professionals, not you guys, because I get it, this is not sexy. You want to see the houses, you want to talk about interest rates and things of that nature. But all of that starts with a great application. And although I love the technology, when I came up in the game, you still had to fill out the application. And a lot of your loan officers don't have a clue. They don't understand that these questions have a meaning and a purpose. Okay. It's in essence a fact-finding mission, not to deny you, but to put you in the best position to offer the best loan products available at the time when you're looking to buy a refinance for you and your family. So that's the part that I don't like. But I do love the fact that it's 24/7, and you as a consumer, it meets you where you are, because a lot of us, working during 9 to 5 hours. You could do it 24/7. I like that part. So with that said, I'm putting together a document. You guys let me know if it's something that you might like. It'll be a living document. And the first section I have, it's called Gathering Documents. And we've gone in and made short videos to help you understand what item you need when it comes to income, with a brief explanation on how to go get it if you don't know where it's at. If you think that that's something that you might like, and you're looking to buy or refinance a home, and you just want to do it the right way, not be rushed, and understand that when you submit the proper application, that's what makes everything else easy. Okay. Uh, you can comment application or DM me directly, and then I could get you this document. And it's one that's living. And as I add to it, it'll grow, right? It'll grow. But the first step is gathering the document. So we talk about the income, right? There's a video there. We talk about the tax documents, okay? If you're, how to get your transcripts if you don't have the physical W-2s and things of that nature. A lot of you guys run into that issue. How to go to the IRS, get those transcripts, your identification, your driver's license, social security card, how to get a social security card if you don't have one. What else? What else? Your asset documentation, how to properly document that, right? What else? What else? So yeah, that's what I have thus far. If you like it, again, DM me or text um, application, and we'll get that information. And then as I work on the next step, you guys also let me know, do you want to see me actually going through an application? Because it's all based upon a universal residential loan application. We just call it a 1003. But if you like for me to break that down in bite-sized chunks to help you understand what information to put in, I don't mind doing that. And we'll put that in the next step, because the goal is this. It's for you to get the best deal for you and your family, right? And you can't do that without shopping. Here, let me give you a better snapshot of this. Yeah, so it'll look like this. It lives online, right? And as we build it out and grow with it, you see what I'm saying? You can have access to this. For you realtors out there, this is a great resource to have to send to any potential buyers, right? Or folks that reach out to you and say, hey, your past clients, and say, how I want to refinance, right? And then for right now in this section, we also have a place where you can reach out, get on the calendar if you want to, so we can have a consultation to see if we're a fit to work together to help you get into a home. So let's see here. I got folks asking me, do I need a video editor by chance? No disrespect, Mr. Galam Abbas. Let's put that on the screen, right? We'll have to get with you, my man. I don't know. I don't know if that's proper at this point in time. Let's put this down. Let's 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 make it smaller. I might be doing good the way it is, but shout out to you. Thank you for watching. I think I'm good on the editor, man. But I wish you well. Thanks for stopping by. So let's see here. Did I? You know what? We looking crazy over here. Huh? Let's scroll out here. Let's zoom out. Yeah, we too close. There we go. So with that, guys, not going to hold you longer. Just as a wrap up, okay, we talked about the 10-year to 2-year relationship as it pertains to mortgage rates and how you need to track that, okay, because we're still at an inverted yield curve, meaning the shorter end of the maturities or the yields, right, are still higher than the longer end. And so once that yield curve gets back to the right relationship, you'll start seeing rates go down. I didn't say they're going to go down to the pandemic levels. That was an anomaly in time, and the Fed helped suppress those rates to keep the economy going. Okay. If you were in on that and you got on that, God bless to you. We don't want to see another situation like that. But rates might get down in a couple of next, 5, 6, 7, 8, back down to that 3% range. But if you're able to buy, get on the ladder, because one thing you haven't seen, and don't listen to me or anybody else, go look at the numbers. Home prices have incrementally been rising. We're not back down even to the 2019 levels. We're nowhere near 2019 levels or beyond with foreclosures or anything of that nature, because everybody that was able to buy is a qualified mortgage. They had the income, they had the credit and things of that nature, and they benefited from crazy appreciation. That's why I want you to get on the ladder. Secondly, 50% of folks don't shop. Why? Lack of education. We're wanting to educate you. No disrespect to anybody, but you can't be lazy either. All right. You guys are some of the same people that'll be on the news talking about somebody got over on you. Okay. You got to shop. You have to advocate for yourself. Right. And so the reason a lot of us don't do that is because we're in fear of the credit scores and things of that nature. Talked about the CFPB and all the things that they have in place. 45 days. 45 days. Quit being afraid of everything. Get a copy of your credit report if you think there's some things are there. Be proactive. I shouldn't be the first person, or your lender shouldn't be the first person telling you about a collection or something of that nature. Just because you say I don't see it, I don't hear it, don't mean it's not there. We're adults, okay? And owning residential real estate, your home, puts you ahead 30, 40 times of the average person. Okay? It's facts. Just got to look at it. I don't care what they say. They all have real estate. You feel me? Credit scores and shopping, again, with the CFPB, don't have to worry about that, right? And then the application document list that we're building. So if you want that, again, application, or shoot me a message. You realtors, if you think that's something that you want to put in your mix with your clients, reach out to me. Let's work something out to make it nice and easy so those folks can get that. Because at the end of the day, you guys know if they're not really approved, you're wasting your time. And that's something that we all have a certain finite amount of. The big man upstairs knows that number. So we want to utilize it as much as possible. So again, right here, schedule a consultation. Rates are coming down. Okay. They're not in that 7% range anymore. If you've been on the sideline, now is a great time. And then after you waited your period of time, once you get into a home with government type loans, then you can look to reposition. But you got to get on the ladder first. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. And until the next time, peace. Oh, watch this video right here. I'll